Welcome to TheoTrade. This is Don Kaufman here doing the weekend update on January 21st, 2017. So here on the weekend update, a number of things that we are going to discuss. A quick look back at what we saw this previous week, but more importantly, let's discuss again, try to be a little bit forward looking and look for some trade opportunities, if you will. So I'll start with the S&Ps this week, which if you didn't watch much this week, well, guess what? You didn't miss a whole lot. The S&Ps closed the week at 2271. More importantly, where'd they really kick the week off? Well, for that, I'll cruise over here on thinkorswim. It's a tool I like, quite a bit here. This is just looking back at the week of trading. So I'll take the date back over to January 16th. Now, if you didn't recall, of course, Monday was a holiday, was Martin Luther King holiday, so we had a shortened trading week. Well, the trading week ultimately led off at 2274. Remember, once again, the S&Ps ended up 2271. Now, this is also precisely what we saw in the previous week of trade. So need I go back another week over here? Remember, okay, this is now on the 16th. We saw 2274 back up. Yet one more full week over there, even go back to the 8th. What did we see? Well, we were 2276. What do we get in the last 2 weeks? Absolutely nothing, ladies and gentlemen. It has been dead flat out there. I mean, efficiency kind of rules the game. So I reiterate one of my stances here. This is a situation where, you want to be net long volatility. Now, there's a lot of different ways to get net long volatility. Last week we talked about buying a VIX spread. I still completely and utterly agree with those decisions in essence to be able to buy volatility. Now, the VIX spreads, they can be highly convoluted. Again, I got, a couple of dozen emails, even more than that, a few dozen emails specifically though, just about some of the VIX trades that I'll put on over here. Just keep in mind, whether you're trading the VIX, whether you're trading the VXX, which is, it's just a derivative, again, of the VIX, but the VIX, the VXX, the UVXY, the SVXY, the yada, 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 all of your volatility products, all of them, they are not based on this VIX. They are based off of the volatility future. And I always like to reiterate that stance over here because I was out here trading the March volatility product, which is I'm trading the VIX. And everybody assumes, well, Don, you bought the VIX over there. No, I didn't buy this VIX at 1154. Okay. Ultimately, when I say that these things are based off the volatility futures, you have to go out and look at the March volatility future. Well, the March volatility future is already pricing volatility up in around 1522. So just keep that in mind. Again, I want to get net long volatility in any way, shape, or form. From where I sit, volatility ain't getting any lower. I mean, did you look at the SPX? There's absolutely nothing going on. And, that's not figurative speech. No, that's quite literal when I say absolutely nothing is going on over there. All right. Enough so much of looking at the SPX. There's one thing that really stood out this week to me. I'll clean this up just a bit over here, kind of zoom out for a moment. So what stood out to me? All right, you look at stocks like, your Apple's out there. Again, kind of flat grinding to the upside. So technology was not really all that exciting. Most of your technology stocks are coming in earnings. Facebook stopped on a dime over here, prior to its earnings announcement. Again, a lot of earnings coming up, and some of the tech heavyweights are in store this next week. So it's not going to be a dull week in terms of earnings, but neither here nor there. Again, that is not what stood out. What did stand out, big standout this week, retailers. Did you take a look at stuff like Walmart? I mean, come on. It's a boring underlying, right? What is going on inside of some of our retailers? So allow me to start with Walmart. It's a slippery slope in here, This is the last 9 months. Now, if you opened up like 3 years over there, we're not necessarily at 3-year lows, but we're not far off of it. Again, taking it into a tighter time frame, you've actually got Walmart, a stock that doesn't move very often. All right, and again, moving from the 72 into the 67 level in a relatively short period of time. However, Walmart didn't really stand out to me, not nearly as much as Target did. Okay, Target just getting absolutely hammered in ultimately a gap down position. And again, people, this is prior to earnings. Sure, there's news, neither here nor there. Okay, when you've got an entire sector that's under a bit of duress, you really want to be aware of it, because here could be some opportunities. All right, so Target, now looking at Target, this is the last 9 months, from 83 all the way down to 64 over here, but literally dropping from 72, okay, down to almost $10 here to 63 and change in ultimately a short week of trade. Again, earnings on the forefront, but they're over a month off. Okay, when you start looking at Target and start looking at the options on there, one of the areas that is not pleasant at this point for Target, and this one again really stands out to me, is the implied volatility is still incredibly low, given the fact that the stock has been smacked and smacked hard, and it's doing it on increased volume. What's not good about that? Because nobody's really tossed in their, the collective towel on Target yet. There could still be some considerable downside to a number of these retailers. And you can say, brick and mortar stores are getting hammered by none other than Amazon. Make every argument you want. Again, when you see a stock that is getting hammered as Target is, okay, this is where, again, when I say I start to look for opportunities, but this is not going to be the obvious opportunity. What I am looking for inside of Target is going to be starting to create a trade against possibly another retailer. So one of the things that kind of comes to mind over here as I was looking at the XRT. Now this happens to be the retail ETF. The retail ETF is also off fairly hard, not nearly as beaten up as Target, not nearly as beaten up as possibly Walmart over there, but in the coming days we're going to start to construct a number of what we call, okay, relationship-based trades in stuff like Target, Walmart, the XRT. Okay, some of this stuff is actually called pairs trading. And looking forward into, some of the opportunities that exist right here, right now, and again, being very forward-looking, these are some of the biggest opportunities that do exist in the marketplace right now, because what do we really have? All right. Listen, I'm a big options trader. There's not a whole lot of premium to sell out there right now. You look at the VIX, it's down at 11. You look at the SPX, volatility dead. Okay, the Russell volatility, it's rather dead out there. But what I'm starting to see is by looking at like retailers, okay, how are the retailers, how are they performing versus other sectors? And I'm starting to see great trades on the horizon here if you're willing to learn a little bit. And again, put on what I call a relationship, or better known as a pairs trade. You don't have to do this with stock. You can do it with stocks. You can do it with options. Technically, do it with futures as well. However, let's back away per se from discussion again of just the XRT or Target or again Walmart over here. Let's look at another opportunity on the same theme. And when I say on the same theme, I'm on the same theme of like what I would call relationship trading. Okay, I'm going to kick it off by looking at the Qs in this respect. So here's the Qs over the last 9 months, of course, rallying up. But again, to make my point, where some of the, again, really the biggest advantages that I see in both the short term and the long term is look at the differential. And again, if you've never seen this before, this is actually a comparison chart that I've just brought up numerous times in the recent weeks, months, okay? And I'll be very, very specific and kind of label everything for just a moment, because again, here's where I see some of the not just advantages, but opportunities. In a low volatility marketplace, you got to find opportunity where opportunity is ripe. And I'm telling you, opportunity is ripe over here. On top over here, we have the IWM. Okay, so IWM, if you're not familiar, that's the Russell. Okay, and then almost neck and neck over here, down below, right there, that little guy's the Spider. Okay, and right here we have the Q, Q. So what's the opportunity ultimately in, and again, trying to be very forward looking, what's the opportunity in here? Okay. Well, the opportunity, number one, I like shorting the IWM or short the Russell. Okay. Now, this is not a trade that's just necessarily going to play out over the next day or 3 days or a week. It could take a little bit more time to play out. But again, you can create this trade purely with options. Okay. I like the idea of being short the IWM. However, what's your risk of just going out there and shorting, if you will, the IWM? Well, the risk is, IWM explodes to the upside over here. So in effect, what we're going to do is we're going to look at short the IWM ultimately and go long the SPY. Now, you might be kind of questioning, well, why are you not using the Qs? The NASDAQ, okay, again, could perform extremely well, neither here nor there. I want to go out and I want to be long, okay, the weaker of the products and short the stronger of the products. So what am I really looking for? I'm looking for IWM to either come down towards the spiders or the spiders to come up towards the IWM. And again, this is looking for a convergence between the IWM and the spiders. Now, I know a lot is written on the screen over here, but it's a very, very simple trade in respect to the fact that, hey, let's say that this IWM does continue to the upside. Well, if it continues to the upside, it's very likely the spiders continue to the upside with it. And it might not necessarily be the most incredibly profitable trade at that point, but if the spiders kind of play catch up over here and start to catch up a little bit to the IWM, you have yourself a profitable trade. In any way, shape, or form, if you put this type of a pairs trade on, okay, effectively, you put a pairs trade on like this, effectively, there can be great returns. But again, we're going to be talking about throughout the course, all right, of the very near future, how to construct a number of these pairs trades. In fact, you're going to see a lot of this coming into 2017. Now, for those of you, if you'd like to attend a pairs trading workshop, and we're going to be doing just that pairs trading workshop here in the very near future, by all means, join us at that pairs trading workshop over here. Go ahead and pop this up onto our screen in this case, and it's the right strategy for 2017 and beyond. All right, and this is coming up again January 24th, 7 p.m. Central. I'll give you some specifics on here. All you need to do is go to TheoTrade.com/snap. Now, everyone is invited to this, whether you've watched TheoTrade, you haven't watched TheoTrade. It's neither here nor there. Again, Tuesday, January 24th at 7 p.m. Central. Just go to TheoTrade.com/snap. Okay? If you're curious what the snap means, it's actually looking for the pairs trade to snap back together. It's a market neutral strategy. We're going to really introduce pairs trading. We're going to talk in depth about how to create a number of pairs trades. Again, we're going to take you from the basics into some of the extreme. It's a completely free workshop. Again, TheoTrade.com/snap. Thanks everybody for joining us here on the Weekend Update. Have a great week, everybody. Bye-bye.